welcome back. Today, episode 35. It's a special one. I'm Tyler Willis, Tyler Willis Media. Payton, what you got going on over there nowadays?
Yeah, hey guys, it's Payton with Payton Peoples and Company, Keller Realty Atlanta Partners, and we got a special guest
Oh my
today.
gosh, I'm pumped because we're going to be busting all the myths about life insurance, about how it's no longer like our grandparents' life insurance policies. We're talking about how we can like maneuver through all kinds of things today. So, Kara, let's just give it a quick elevator pitch.
Tell us all the things.
All right, awesome. Ramey, financial professional with Global Financial Impact, independent agent. So helping families dream again, utilizing life insurance. So one thing that we specialize in is we are able to meet with our clients at no cost to them. So complimentary reviews, looking at all of your finances from your utility bills so that I know everything that you have going on so you can properly plan, just not for retirement, for now, for retirement and how we can elevate our children's lives. We do a lot with $1 million babies, utilizing life insurance, and come from the corporate background for 20 years. So I was a big fan of 401k. So definitely can dive into that and kind of understanding like, oh, I was very excited about it and thought like, oh, I'm gonna put all my money in there and I'm gonna be so rich in retirement. And now I'm like, oh, wait, like learned a few things. So I'm super passionate about what I do. I love helping families. Probably more excited than my clients, honestly. One of my favorite things to do is set up our kids. I have 3 girls, 9, 11, 13. By the time they're 65, they will be tax-free millionaires. Be able to take out about $100,000 a year, just because it's something I set up today. So, and it's not a lot of money. That's probably one of the biggest myths is that if you go talk to somebody about your finances, that you're going to have to go pay. And you're like, wait, I need the tools, right? Like I need to know, I want to go meet with someone, but I'm afraid it's going to cost me $500 or $1,000 and I really don't have that. I need to figure out that, what tools do I need to get there, right?
Right.
And so I think that's the biggest thing is what we're lacking is we're kind of like apprehensive to talk to somebody because we're like, oh, one, they're going to judge me. I don't care if you have $1, like I think it's great if someone is like, hey, I need help, right? Like reach out for help and like, let us help you. Let us give you options. And if we can't help you now, maybe we can help you in 6 months or maybe you know someone else. So we are very, very passionate about what we do. And there's not enough of us to help everyone. So, we're running as fast as we can, trying to help as many families as we can. And that's why I do this 7 days a week because I absolutely love it.
And so you can work wherever you want, right? Like do you have a corporate office that you have to go to, or you're like, hey, I'm just going to be on the beach working on these policies today, guys? Like, what does that look like?
Yeah, I'm actually in Florida today. So I'm in Port St. Joe at our beach house. I do everything. All of my calls are through Zoom. So
that's awesome.
I was looking for a way, like when I left corporate America, I literally wanted to work from home 2 days a week. I was like, please, can I just work an extra day from home? Like it'd be very helpful for me to get my laundry done. You know what I mean? Like, being a mom, like you get it, right?
Yep.
Like you understand as parents. So I just happened to be at the pool one day talking about refinancing my house of all things because rates were super low. And I heard a lady say her agent was going to make $10,000. And I was like, wait a second, I have a master's degree. Like, what does this entail, right? That's kind of how I got into the business and got licensed. And then they were like, oh, well, COVID, so everything's through Zoom. You don't even have to go to people's houses. And I was like, wait a second, like no Atlanta traffic. Like I was spending 3 hours a day in traffic to go to a job that I was literally making $300 a day.
Yeah.
Like I had 3 in daycare, like, and we were paying,
more than $300 a day.
Like we were literally paying my paycheck.
Yeah.
And the only reain I kept working was because I didn't know another option for retirement planning. I thought 401k was my only option and I didn't know anyone and no one had said, hey, you could just start this account over here as an independent person and just put away. I would have sold things on Facebook Marketplace. I'd have been like, here, I'll sell a few things and get to spend time with my kids. But I didn't know. And so I always say like, hey, like know your options. I want everyone to know that you do have the options to make additional income without it taking time away from your family. And yeah, I work very hard and I love what I do. And my youngest always says like, oh, my mom does finance businessing.
I love that.
But yeah, I'm always like, tell your teachers, tell your friends.
Tell
like,
everybody.
And they're like, what do you do?
Yep.
Oh, that's
Kids
awesome.
are the best tool we've got.
Yeah, and
Yeah.
they're not scared of things. They'll go tell everybody
No,
like, "Hey, come talk to my mom because she could turn you into a millionaire." Like you don't
Yep.
have that same kind of like level of confidence, but your kids do, and you're like they'll amp you
Kids
up.
do.
So,
That's right.
all right, well,
They're my
I
hype man.
found a good myth list, and you haven't seen this yet, so I'm just going to hit you with them. Okay,
Okay.
okay, let's go.
myth number one. Let's bust it. Let's go ahead and just bust this one right on down. Life insurance is only for old people.
Oh, that is a big, big myth, right? The younger you are, the cheaper it is. We're even upgrading people's policies at this point because what we all know, like we're all 30s, 40s, what we know is term insurance is just if you die. So you get a policy, you're younger, it's not very expensive. There's no perks to it. All it is like if you pass away, your
Yep.
family gets some money. And they say like 98% of people never use their policy because it expires before they expire, right? Because you get it. Well, like I have a policy, like when I was 27,
Yep.
right? It's $500,000 policy. I pay $33 a month. I'm never going to get rid of it because it's cheap, but it has no bells and whistles at
Nope.
all. And so what the insurance companies are doing now is one, they compete against each other. So that's beneficial to the
Mm-hmm.
clients because they want to have the best and so they continue to add perks. So we have term policies that literally you can get living benefits. So chronic critical terminal illness, like something you're diagnosed with and you may not pass away for 24 months. So not 6 months, like
Mm.
24 months, right? And think about, I mean, we even have policies for kids. They're not term policies, but we have a type of life insurance policy.
Mm-hmm.
We call it $1 Million Baby that even comes with living benefits. Your kid is diagnosed with someone, they get put in the hospital, you get a portion of your death benefit immediately.
Wow.
It's insane. Like, it's so crazy what we're able to do. And, think about it. If you worked for a company, right?
Mm-hmm.
You had life insurance only through that company, you have a heart attack, right? You're trying to get better in the hospital, but you're worried because your bills don't stop when you go to the
Yep.
hospital.
That's right.
And you find out that the job is going to let you go because, in the state of Georgia, they don't have to have a reason.
That's right.
They
Nope.
let you go. You now don't have life insurance any longer. And now you had a heart attack. And so you probably can't get approved by a carrier. How terrible is that, right?
Mm-hmm.
Yep.
So having those living benefits is crucial because they say 76% of people will have something happen to them where they will need the living benefits because living benefits includes if you can't perform 2 of your 6 daily activities. So say it's like you turn wrong in the shower. It's not that you're like out doing some extreme sport, right?
Right. Right.
It's like I turned wrong. I tweaked my back. I now can't close. You can't do 2 or 6 daily activities. We call the insurance company and they send you a portion. You have a terminal illness. You have a chronic critical illness. We reach out to the insurance
Wow.
carriers and they say, okay, because what you're doing. So what life insurance is all about is you are transferring the risk from you to them.
Mm.
So they've done all the actuary. They've collected all the
Mm-hmm.
data and they say, okay, well, Kara, she's 41 years old. She's a female. Based on that, this is how long we think she's going to live. And so they're taking that chance. And so that provides protection and guarantees for you. And so you can have peace of mind as the client. But so that's a really nice thing. People see it just has kind of a bad taste in a lot of people's mouth because they're just like, oh, well, my mom had life insurance, but we never got to use it because she got it when she was
Yep.
30 and she lived to be 80 and it expired when she was 60.
Yep.
Mm-hmm.
It's kind of like home warranties,
Oh.
right? Like they expire and then like once they expire, the next day your fridge breaks,
Yep.
right?
That's right. God, that's right.
Hmm. Yeah, because we just went through this
So
too with whenever my dad passed, trying to contact the life insurance, and my mom didn't know anything about it. And so it was like constant back and forth. And one of them lapsed because it was a term policy. So like she was banking on having like an extra 50,000 that just vanished out of nowhere. So it was just those constant things of like if dad didn't have all these like steps in place going, hey, contact this person, like it just became such a nightmare right there at the very end whenever we needed the help to like pay for the funeral. So it's real life things like just completely just blew up into these massive problems.
and that's really the one thing that people don't think about because it's not fun, right? Like me having the hard conversations with your family
Hmm.
is easier than you having them
Exactly.
because I can ask the hard questions because I'm not directly
Hmm.
related, right?
Right.
So it's very hard to have these conversations, even with my own family, right? Like I can tell my mom all day long, you need life insurance, you need this, and she'll be like, it's fine, right? Like it's just I'm not the right messenger, even though I'm in the industry,
Yep.
right? And so I think there's just a lot of people just don't have the right information. We tell people all the time, I can either bring a check to your funeral, or I can bring a casserole.
Mm-hmm.
And people pass away. I mean, we had a teacher at our school pass away,
Mm.
young, like literally totally out of the blue, right? I don't know what she had set up, but it's like she had a family, she has kids. It's like this is like totally unexpected, and people are having to start GoFundMe's because things are happening, right? People are
Mm-hmm.
dying. It's not like you're guaranteed to live to your 99. So we just don't have that guarantee, and so it's like at least you can provide some comfort in knowing that okay, you had something in place, because remember too, life insurance, it doesn't go through probate. It goes directly to the
Mm-hmm.
beneficiary. So you're getting that money faster.
Which is a
So there
huge
are
problem because most people aren't prepared for that
Mm-hmm.
stage anyway. Because if you aren't set up with having a trust and all of these things taken
Mhm.
care of before you die, all your stuff's going through probate and then everything is hung up. So yeah, hearing of
Exactly.
that,
Even if
that's
you
a huge
even
deal.
if you have even if you have a will.
Mm-hmm.
Right,
So
correct.
a will is just considered your wishes. It's just like, hey, like I would like this to happen.
Yeah.
So if you don't have a trust, and that's one thing we do as well. So we not only provide life insurance, but we have companies that provide trust.
Wow.
And so we like, even like one of our carriers, our partners, Ethos, like you can literally get coverage within 5 to 10 minutes. They're approving like 95% of people. And as a perk, they're adding a trust and will app. So you literally can build a trust. People think of trust as like, I'm a trust fund baby, I have to have millions of dollars. No, a trust is just protection.
Yep.
A trust is so that I can, if God forbid my husband and I pass away, that we can say, hey, this is the person we want to take care of our
Mm-hmm.
kids. This is the person we want to take care of our finances. Typically that's the same person. But if you pass away, your neighbor can't come over and be like, oh, I know them, they can stay with me for a while. That's not how that works.
Right.
Your kids get taken, they get put into foster care until they can figure all that, that stuff out. And then it's terrifying as a parent to think that we have to plan that way, but you do, because you really like a trust really is going to protect you. It just is a layer of protection for you.
Right.
Um,
Yeah, I think if
and
you're
so
taking notes with all of this, like here's the big two so far. Like everything you were taught growing
It's
up
wrong.
of, oh, I should just get a will, and oh, I should, just trust my 401k to get me through for retirement. Incorrect.
Nope.
You are wrong.
Nope.
yeah.
Yeah, not
And
the
that's a
plan.
big thing about like 401ks. Like when we show, we educate. So that's part of our platform is financial education. So I get on with a client and I explain exactly who we are, what we're about, how we have multiple carriers so that it's not a one size fits all approach. We do a personal financial review for all of our clients. It does not cost you. And then we just give you recommendations. You don't have to move forward with any of them. It's just, hey, here's some knowledge, here's some recommendations. This is kind of what we're seeing. This is what we would do based on what you're doing now. Is it going to get you to where you want to be?
Mhm.
Right. And that's where it comes in with that inspiring families to dream again, because people are just like, it is what it is. And I hate that. Right.
Yeah.
Like I literally had a person sitting next to me at an event and that I went to, and they were like, my husband and I will never retire. We're never going to be able to retire. And I was like, why? Like why can't you retire, and she was like in her like 30s. I mean, like she wasn't old. It was just like it was crazy to me, right? Because like I met with a
It's
client.
reality. Like so many people in our age group are just like, I'm gonna work until
I die.
I die. Like, yeah,
Well, and then here's the other thing, right? So you're in your 30s, 40s, your parents are aging, right? Do you want them to live with you again? Do your parents want to live with you again?
right,
Probably not. They
right.
probably don't want to come live with you.
Mhm.
I mean, like, yeah, they love to visit, but they may not want to be.
Right.
And we may not want our parents to live with us, right? Our grandparents did a really good job of planning. Typically, they have a plot picked out. They've done
Yep.
all the things they need to do. But that's the problem, is we're seeing more and more people just don't know. Like they just assume that their parents have everything they need together.
Mhm.
And it's not till something happens that they're like, oh, he didn't
no.
have a plan, or
Mhm.
it wasn't prepared. And so unless we've experienced that, we don't know. Here's another thing. People don't realize the cost of long-term care.
Right.
It can be $5,000 to $10,000. That's just for basic
Mhm.
care. That's not memory That's not anything else. That's just, where are you going to come up with that money? That's more expensive, than a mortgage.
Mm-hmm.
But if we don't have something in place, then that's going to fall on you as the child. Like, as the adult child, that you're going to, you're not just going to let your parents just like not be cared for, right? It's very expensive. It's very, so these are the conversations we have. And there are a lot of financial people out there. But one thing that I do specifically is I'm like, let me look at everything. Like, in retirement, do you need a new car? Because that's an expense. That's a monthly expense that maybe you didn't, maybe you don't have enough, right? Or a lot of people are in a higher tax bracket in retirement. So that's something to factor as well, right? Like 401k, all they tell you, literally, you go to a job and you meet with HR and they're like, health benefits, life insurance, like, get a 401k and we're going to match, right? Here's what they don't tell you. The employer gets the write-off for the match. You pay the tax on the match. They don't pay the tax on that. You pay the tax on that. So say you want to retire at 65 and you have $1 million in your 401k. Well, how long is that going to last you, right?
Which that's a whole other conversation, because people just think $1 million is a huge amount of money.
Not anymore.
And it's not.
They're saying now you need $3 to $4 million to retire and stay retired.
Right.
You can retire with $1 million, but you're probably going to go back to work in 7 to 10 years. And that's just pure data. That's just saying that, and that's saying that you're going to take out about 2.8%. Think of this. You have $1 million and they're like, okay, this is how we think we think you're going to live, right? After you pay the taxes, because remember, this tax deferred, you haven't paid the tax yet. We don't even know what the taxes are going to be, right? So you're putting money aside and then you're going to take it out at 65, which we have no idea what taxes will be. What if you're in the 50% tax bracket? Like, who knows? Who knows what they're going to change them to? We have no control over that, right? So you're putting money away. And here's the other thing. You have to wait till 59 and a half to access it. Otherwise, you have to pay a penalty.
Yep.
What if there was an account that I could show you where you could access the money at any age that you've already paid the tax on, so you don't have to worry? It grows tax-free. It gets taken out tax-free. It provides protection and guarantees. People would be like, yes, please. Like, what is that, right? How does that work? Because people, a lot of times, they associate guarantees with no growth. We have a product that has guarantees and growth and protection. I don't charge anything for any of my clients they can't pay me, honestly. I would get fired. But it's like, this is what we need. We need this education. We need to be in front of these rooms that are saying, hey, like, did you know? Because how many times do you watch like TikToks or something and you're like, oh my gosh, this is like the best mom hack ever. Like, how did I not know how to use that? Right? That's what we need in finance. Like, when it comes to finances, because
100%.
Because things are changing too, right? College is very expensive. I have clients that they're $300,000 in debt because they sent their kids to college. They don't have any money saved for retirement.
Right.
So, one, they may never retire. And two, they may be living with their kids for the rest of their lives because they don't have something in place. So again, we can go down a lot of rabbit holes, but just knowing that life insurance really is for the living. It's not for the dead. You can get a term policy. That's great. Have something in place. Please protect your families, because it is so, so important that we protect our families. And, if they're having to grieve already, they don't need additional bills.
Right.
GoFundMe is not the answer. That's kind of really not what it was set up for. But people it's not that they don't want to plan. It's just they fail to plan, right? And so that's come in. And that's the nice thing about being able to do a Zoom, right? I can jump on a Zoom at any hour. You don't have to, travel to my office or whatever. And I can have several appointments with my clients and say, hey, like, what do you have going on? Like, how can I help you? Right? Like, what is your situation? And that's what's been very nice, is like, we really have that customized approach without that customized price. Right. And so that's just, I love what I do. I love how we can help families. And I didn't know this, I come from the corporate world. I didn't know this for 20 years. I was like, 401k, right? Like, that's the answer. Because that's what my parents did.
Right.
And they lost half their money in 2008,
Gone.
They were part of it. So it's just like, one thing we like to, call out too is like, I'm not in the same lane as a financial advisor. If you want a financial advisor, that's great. I can work with your financial advisor. They're in a variable market, right? If you have $1 million invested with a financial advisor, they're charging you a fee. Okay. we'll say 1%, right? So we had a client that she was getting charged 1%. She had $1 million in assets. This financial advisor was making, you know, money on her every year, and she didn't even realize it. He was making about $1,000, even if he didn't even make her money. If
Right.
it was just he was managing it, right? And so she had him for 10 years, and so gets on a call with us, right? Like, because again, we're different lanes, we can offer different things. And we were like, yeah, did you know, like, if you've had it for 10 years, you probably paid him about $10,000. And she was like, really? And looked to her financial advisor, and he kind of like squirreled, like, oh, like, I don't
Mhm.
want to admit. But that's the thing, like, a financial advisor cannot offer you guarantees. I can offer you guarantees. Like, my license allows me to do that. And so that's what's really great is, like, I can say, hey, based on data, this is where we think you're going to be. Remember, you have look at all of these different buckets. This is how you're going to pool it. This is how the game plan is going to work, so that you can retire with peace of mind and know that you'll never, I mean, who wants to go back to work after being, could you imagine
No.
being 65 and then being like, oh, well, I'm 75 now and I have to pay RMD, I have to pay, required minimum distributions. And then now I don't have enough money.
No.
I've got to go back and work for minimum wage.
Yeah, absolutely not.
Nobody wants to do that.
No, it would be a cold day in hell. Absolutely not.
Well, that goes right in perfectly to myth number 2, that life insurance is too expensive. Like, let's go ahead and bust that one.
There are so many different ways you can figure out how much life insurance you need. So, like, one thing that we use is the DIME method, right? So that's looking at your debt, your income, your mortgage, and education. So if you, depending on how much debt you have, how much income you would want your family to have if you were to pass away. So God forbid your husband or wife passes away, they bring in $100,000 a year. We typically times that by 5 or 10. But is it going to take you 5 years or 10 years to get back on your feet? Especially if you have kids, you don't want to have to uproot them from the house that they know and love, the schools they know and love. And then, like, your mortgage, right? How are we going to cover your mortgage? And then also education, if you want to pay for your kids' college, right? That's kind of an interesting topic right now too, in the sense of college has gotten very expensive. Is that something that you should just let your kids take care of? But if you were to pass away, so say you need $1 million in coverage, you don't need all of that in permanent coverage. And so we have different approaches, right? And there are life insurance products where you actually can earn compounding interest within them. That's something a lot of people don't know about. There's index accounts that you can use. And so you figure out, okay, how much of this, you say I have $1 million need, how much of that do you just need temporarily? Right? Because eventually your house is going to get paid off, your debt's going to go away, things fall off. So you maybe don't need $1 million for the rest of your life. Maybe you only have 20 years left on your mortgage, so you need a policy for that. You're like, I just need to cover this mortgage for 20 years and then it'll be paid off. You can even stack policies like that. So it's really, really cool what you can do to where you're just making sure certain things are taken care of. One thing that we specialize in, though, is those index accounts where it's like, hey, you're going to pay cost of insurance and then the leftover is going to go into this uninterrupted compounding interest bucket. And that's why we have life insurance policies for kids. Yeah, it's a life insurance policy, which is great, has living benefits, but really we're not concerned with the death benefit of it. We're more concerned with the cash accumulation.
Yep.
So that if you have money in there and you want to buy a car for your kid at 16, you can access that money and you own it. Your kid doesn't own it. The death benefit is tied to the kid, but you own it as the parent, and you can own it as long as you want. It doesn't automatically roll to them at 18. I mean, can you imagine, like, graduating high school or even like graduating college and being like, hey, like, I had this account and you have $100,000 in it? Like, they would not spend that money well.
They would suck at it.
No child needs access to that kind of money. No.
Yeah.
But that's perfect.
But it's a way for parents to put away money that for things that they've already kind of thought, like, okay, I know I'm going to want to pay for my daughter's weddings. I know, like my youngest, she's like, I want to be, as of right now, she wants to be a hairstylist. Right. So she's going to need money to start that business. Right. Or maybe they want money to put a down payment on a house. It's not an account that's only for education. And because it's life insurance, it's not considered income. So it's not a factor when you go to apply for a FAFSA loan or anything like that. So there's so much flexibility and liquidity within it that it's super cool to be able to show someone that I can set your kid up. They have living benefits, just like an adult. They have a death benefit, but they have this account inside where we're able to put money away from them. And it's not like you have to put thousands of dollars. You could do $100 a month, $50 a month. get a small policy for them, be contributing to it consistently, right?
Mhm.
And then when your kid is like, 14 or 15, they start working. And then you teach them, hey, look at this. You have this account that we set up for you. Now that you're working and you're getting, say you're getting $300 a month, let's take a portion of that and we're going to teach you how to save for retirement. They have this account that they will have forever
Mm-hmm.
because of something you did as their parent to set them up. They don't ever have to requalify for life insurance again.
Mm.
They don't have to worry that they have to get a job that has life insurance or even a retirement plan. It gives them the power of choice of what career they choose, and they have access to this money. And so it's a phenomenal. I just absolutely love them. I love setting up kids. I love the fact that, I mean, gosh, if our parents would have done this for us, I'd be like, I'm out of here. Like, I'm
Oh,
retired.
that's right. I'd be at the beach right now full time.
Yeah, it's just like there are products out there, but we just don't know, like we don't know what they're
Yep.
called. We just don't know enough, right? And so that's a great thing about what we're doing right now is we really are going out there. We're 21,000 agents strong right now. We just, our company launched in January. So we are really just have so many families to help. And on the other side of that, not only are we doing life insurance, but we're also helping people roll over money for 401ks and putting them into something that would provide income for life, because that's another thing people don't talk about is what do you have in your portfolio
Mm-hmm.
that is going to provide you income for the rest of your life? Like you cannot outlive your money. That's what you need. So, and it can be anything, right? It's just knowing that, hey, you're good, you're going to be able to live and stay retired, right? And it's obtainable. You can do it. There are ways to do it, and it doesn't mean that I'm going to put you on a budget or
You're not going to cut
take.
people off from their Starbucks. Come on now.
Yeah, right.
Yep. Oh,
Yeah, like that's $6. Yeah, like
Uh-huh.
don't spend that $6 on your Starbucks. It's like, what? Like people, it's think of it as this, like if I put you on a diet or something, you'll do it for a bit, but then it's like then you're really gonna crave like whatever you couldn't have, because we want what we don't have, right? So it's like if you make it in kind of these bite-sized pieces and you say, hey, like maybe we just save like $50 a month for the first 2 years, and then for the next 2 years we save $100 a month, right? Like you can stair step it, kind of what are your goals, and then how do we get there? So sometimes that's working backwards, right? Like we're looking at your finances and we're saying, hey, like this is what you have going on now. Is the job that you have going to are they going to double your income, or do you need to look for something else?
well, here's a good one.
So
Here's a good one that we can kind of tackle. So if I'm stay-at-home parents or unemployed adults don't need life insurance because they don't have an income to replace. Like that's a big myth. I think that's like one of the biggest myths.
Yes.
oh my gosh, this one infuriates me. I always tell people, because I can't tell you how many clients I meet that they're like, I'm a stay-at-home mom and all I do, or I'm just a stay-at-home mom, or all I do is take care of the kids. And I'm like, okay, wait a second. Like if your husband had to go
Bingo.
out and hire a cleaner, a cook, a taxi service.
Mm-hmm.
You know what I mean? Like all of these things that we do so that you can go
Mm-hmm.
out and have a job. Like my life insurance should be higher than you know what I mean?
Exactly.
Like that it kills me because people just and and honestly I feel like that's a society thing,
Mm-hmm.
okay? Because when I stopped working in corporate America, people were like, "Oh, what are you doing now? Like you don't have a job." And I'm like, "Wait a second. Like I went out and started, I mean, like I know you did this, Tyler, like
Mm-hmm.
you left a job and started the photography business, and it's like people don't put any weight on it. They don't support you until they see that you're successful. And
Mm-hmm.
Yeah.
it's terrible that it's because it's not the
Bingo.
norm, right? It's not, and that's what crazy. Like a stay-at-home mom, you should have probably $1 million or $2 million in life insurance or whatever your need is, right? Because give yourself a salary, put a number on what you feel like
Mm-hmm.
you would be paid as a stay-at-home mom. Is that 250,000, whatever that is?
Yeah, it's like
Because
just looking it up right now, just a quick Google search, but it's like 185,000 is the starting pay for having one child,
Mm-hmm.
stay-at-home mom with one kid. So,
yeah,
if you just need a little ballpark of where you should start that conversation, if you have one child, start at
yeah, because I mean,
185,000.
yeah, and depending, right, and like depending on their age, right?
Right,
I mean, like I had three in daycare. Like if you have kids in
right.
daycare, like well, that's not getting any cheaper. There are so many intangibles as well that you have to kind of put a price
Mm-hmm.
tag on that people don't right? You really have to think about, you both should have the same amount of coverage or more. When we set up kid policies, most of the carriers, you have to have the same amount of coverage, or you have to have more coverage than your child. You cannot have a child with more coverage than you. Now, sometimes it's for both parents, and sometimes it's just one of the parents has to have that. But I mean, there's no reason why you should not have some kind of plan, because at the end of the day, even if you are a stay-at-home mom or whatever job you do, right, or whatever way you bring in money, there's a ton of ways to bring in income, right? You have to think, like, if with life insurance having living benefits now, you're probably going to have something happen to you. You're going to have a stroke, you're going to have a heart attack, something is going to happen to you. And you know what causes most of these events is stress. You get diagnosed with cancer. And then some of it's hereditary as well, but it seems silly that it's like, oh, you just get life insurance because we're going to have to replace their income. Like, there is a whole nother conversation nowadays. Because again, when our grandparents, they took care of the kids and only one person worked. Now, most families, it's dual income.
Right.
So it's very interesting when people are like, oh, I hate when people say, like, I'm like, no, you're not just a stay-at-home mom. Like, make a list of all the things you do in a day and then tell me. Like, going and getting a job would be much easier. It's just like owning a business. Me going and working for somebody else would be a whole lot easier.
Oh, gosh, yes.
I know that's right.
Oh, yes. Well, here's a good myth that I want to bust. So once my life insurance policy is issued, I can't make any changes to that contract.
It just depends on the type. So like I was saying, we have even term policies now where you can upgrade them to permanent life insurance. You have a certain you have a window. So like if you have a 10-year policy, typically in the first 7 years, you can upgrade. There's a lot of flexibility within insurance nowadays. It just depends on what you're looking for and what your need is. If it's just a basic term policy, well, then you could just cancel it. You know what I mean? Like, term policies, you can cancel. There's no.
But yeah, because I think that's probably where a lot of people, myself included, don't know enough, which just becomes more overwhelming, and they don't know how to start the conversation. And it honestly is like, okay, well, if I can't even afford groceries this week, why do I even want to talk about setting aside an extra $50 in my paycheck or whatever for this? So I think what a lot of people would want to know is, let's say you have 2 kids and you've committed to a plan of where you're putting aside $50 every 2 weeks out of every paycheck or whatever for your plan. What happens if that needs to be adjusted? What happens if, inflation goes through the roof and you can't afford to do $50? Maybe you can do 15. Like, can adjustments like that be made without consequences?
When you're talking about like index accounts, like what we're setting up, so these are accounts that we're properly funding, properly structuring, that have a lot of range of flexibility. This is a little different than a term policy, right? Term policies, typically you're going to pay the $25 a month, or you're going to pay it quarterly or yearly, right? Now, if you can't afford it, you can always, and we advocate, we can always call the carrier and say, hey, there's just no way they're going to be able to meet this. What are our options, right? Because a lot of people, and this is in the past, a lot of people, what they've done is they've canceled the life insurance policy first. When it's like, don't cancel that policy. Don't pay your cable bill. Like, don't pay another bill. Like, let your water, something like that, before you cancel that life insurance. But like a lot of accounts that I'm setting up as index accounts. And so the way that they work is like, if somebody says to me, hey, I can put away $500 a month. Okay, we're just going to say $500 a month. And I say, okay. And I look at all their finances and I'm like, you know what? Like, that seems like you're really going to be stretching to do that, right? Because if an unexpected bill comes up or something, that might really be stretching you. So why don't we start with like $300 a month? Those accounts, they do have a minimum you have to put in per year. So, and a lot of it is a wide range. So you could put in like $6,000 a year, but the minimum you have to put in is like $1,000. So it really gives you that wide range of like, we make sure that, okay, let's look at all of your finances and, do you have an emergency fund? And let's make sure we're not stretching you, because we don't want you to lapse in coverage.
Right.
We don't want that to happen. Now, again, those are permanent policies. But yeah, typically what we say is like, if you're having a hard month or something, call us first before you go and cancel that, because it's better to maybe not pay a membership fee or something like that over not paying your life insurance.
I think that's a really good point in general, because I think a lot of people, I deal with this a lot. I know if Megan were on, she would say the same thing. that like when you're talking about your mortgage payment or car payment or whatever, if you're struggling, call the company. Like, don't just not pay it or assume that because you're going to miss one payment that they're going to foreclose on your house. Like, I mean, there's always going to be like an extreme circumstance, but call the company. Just like have open communication. Like, yes, you may feel some kind of way, and that might make you feel like, that's hurting your pride a little bit. I get that, but just communicate. Don't just assume things. I feel like that's like the overarching theme of our of our podcast. Talk to people, don't assume things, because ultimately that's going to help you in the end.
Yeah, and that's like I teach my girls. I'm always like, if they want something, it can be something simple. And I'll just say, well, go ask. All they can say is no. Go ask the question.
Right.
And maybe you get a no again, or maybe they're like, oh yeah, like my middle daughter is 11 and she was notorious when she was smaller. We would go somewhere and we'd give her $1 for the concession stand and she would come back with like Oreos and chips and a popsicle. And I was like,
how did you get all that?
Mm-hmm. I'm like, Elle, how did you get that? Like, we gave you $1. And she's like, oh, I just asked. And they were like, you can have anything you want. And I was like literally, we were in Pittsburgh and they were playing at the park and they would happen to have like a concession stand. And she literally went up to the concession stand and was like, do you have anything for free? And the lady's like, actually, we do. We have popsicles, and handed her a popsicle. And my daughter was like, well, I need one for my cousins and my sisters.
I love it.
Like that's the thing. Like, and we were talking, I mean, this kind of circles back to how we were talking about kids. Like, they really don't have, I mean,
nope.
They don't know,
no shame.
Right?
No shame.
They're just like, this is what I want.
Yep.
And I'm going to get it. And we always say like they would make perfect salespeople because they just are consistent. Mm-hmm. They're like, mom. And I'm like, don't say it.
Yep. That's right. Yep.
And then they're like, fine, you can have the fries or whatever it is, right? Like, you just give in because they're so consistent. It's like, if we would do that as adults, like, we would all be very, very, very successful.
We would all be winning. I know that's right. Mm-hmm.
I mean, just look at those little Girl Scouts every year. They get us. Oh, they get us. They don't care. There's zero shame.
Nope. Zero shame. It's like, I know you've been waiting for this all year.
Your crack dealer has showed up and I got product.
That's right. That's right.
Yeah. How many would you like?
That's right.
Not would you like, how many?
Exactly.
Mm-hmm. How many can I put you down for?
Right?
So, like, what does the steps look like to get coverage? Like, is there still a medical exam that goes through? Like, what does that look like?
It just depends on the carrier and the client. We're seeing a lot of people not even have to go through a paramed, which is getting blood and urine drawn. They are approving them. I actually had a client the other day. He wanted $1 million in coverage. He just wanted a basic term policy with living benefits, of course. And we typically put in all of our clients as standard non-tobacco, just because we don't want to say like, yeah, maybe you'll get a better rating, but we don't want to promise any of that. So I put it in, and within 2 days, they were like, oh, like based on his health history, like he doesn't have to have any medical exam. We're going to approve him at Preferred Plus, which is the top rating you can get. So his insurance actually went from like $151 a month to $130 a month because health and wealth go together. Mm-hmm. And now, if you haven't been to the doctor in a while, then sometimes they see that as like similar to like having no credit was considered bad credit, kind of that. Why haven't you been to the doctor in 5 years? That's weird, right? And so sometimes then they'll kind of raise questions. But I've had a lot of clients lately where it's just a conversation with you. I show you how we can help you. I look at your finances, even looking at your monthly bills. We put in an application. We don't take any money with the applications, and we see what the carriers come back with. And then we say, hey, do you want to move forward or not? It's as simple as that. You don't have to, you're not forking over any money in the front end. And even if you were like, oh, I think I can do $300 a month, and in the process you decide like, oh, let me start with $200, you can certainly do that. So lots of flexibility within the policies as well. And a lot of times our conversations start with like, oh, I want a policy for my kid, or I need a policy for myself, and then we're like, okay, like what else do you have going on? I can help with rollovers. People are like, oh yeah, I did used to work at that company. There's probably money just sitting there, and people are surprised that they have money that they do need to do something with. So can certainly help in that aspect. We literally do everything. We always say like we're like the Amazon of financial services. The one thing that we don't touch on is, I can't tell you like the best stock to pick. That's not my lane. So that's not my expertise. And so I can help you in other ways, but that would be somebody else for sure. And I'm not afraid to say, like, if I don't know something, I'm like, hey, like, that's not my lane. Like, go talk to this person.
Totally. What about like pre-existing conditions? Is that still, what does that look like now? Is it just based person on person, or is it like just by the policy or the company?
It's person to person, honestly. Like we have a care, so one of our partnerships is with Ethos, and they're literally approving like 95% of people, even people that had like heart attacks. Like we had a guy that, he was a little older. He was in his like 70s, and they just wanted a small policy for him. They were being quoted like over $800 a month for
Wow.
him. And so we were able to find him a policy which would cover like his burial. And it was like $150 a month. And even though he had a heart attack like 3 years ago, they still, So what they've done as a company is they've accelerated the underwriting process. So what we used to be seeing for typical insurance, where it could take months to get coverage, I literally have had clients get approved in 5 to 10 minutes. So like if you were like, hey, I need to get a policy because I'm just worried, we can literally get on, they fill out an application, they answer some health questions, and Ethos comes back and says, hey, we're willing to take you on as a client, and this is how much it would be per month. And they're the same carrier that I was saying that comes with that will and trust as well. Which, I mean, if you've ever set up a will and trust, I mean, it's $1,000+ minimum to set that up. So it's kind of like, hey, like I can have life insurance and
two birds, one stone.
All of us have the best intentions of setting something up, but there's just things that get in the way, right? We all have kids, and they're very good at stealing our time and saying, but I need this right now. I need you to make this, outfit, and I didn't realize I have to do this project for tomorrow or whatever. And so then you really have to set aside the time to get your finances in order, get your final wishes in order. Because again, a lot of the trusts too come with like health directives. So that you can make sure that the hospital knows what your wishes are, your spouse knows what your wishes are, because that's just conversations we don't always have. There's a lot of people that are like, I have no idea if my spouse wants to be married or cremated or they couldn't feed themselves on their own. Do they want to stay alive? Right. It's like, which again, those are not fun conversations.
But you got to have them.
You do.
But you have to have them. And you really have to advocate. Like what we do on the financial side is we really advocate for our clients. And it's so important, like having that advocate, because we know the industry, right? And so I'll give you an example. I had a friend that had a simple procedure, supposed to be an outpatient procedure. They messed up and she ended up in the hospital 13 days, a $200,000 hospital bill. She went in for a simple procedure. I was her advocate. She had nobody. Family showed up. I was the only one. And I was just like, I was supposed to be the ride. Like I was just the one that was like taking her. And then like I was going to pick her up in the afternoon, like easy breezy surgery, end up there at 11 p.m. at night. And I'm like, why is there a surgeon in the room telling us this? What happened? And so then I learned very quickly, okay, I have to be advocating for her, because I knew her as a person. I knew asking those questions of like, hey, she's not going to get better unless you tell her what's next. Like she's the type of person that needs to know the next 3 steps, right? And she's not going to do well. And so that's what I do on the financial side. I very much am like, okay, what do you have going on? How can we help you? Because finances are a huge, huge stressor. I mean, we all know nobody likes to talk about their finances. Like we would all just like to like bury our head in the sand and be like, everything's hunky-dory. Like it's great.
Yep. Yep. Well, it's so taboo to talk about. It's not, it's just now becoming quote normal, I guess, to discuss finances at all. Like as a society. I mean, I really commend younger millennials and Gen Z for really stepping up and using platforms like TikTok and stuff to be more financially transparent and to share this information, because ultimately the conversations aren't happening otherwise.
Exactly. Yeah. And that's the biggest thing, is like having the conversations. Well, the other thing too is, when our right now social media is, you want to make it look like you have like everything is perfect and your house is clean. And I'm like, most people, I'm like, I always joke, I'm like, you come in my house, like my house is clean, but you'll probably trip over something. I was like, no one will ever rob us, because they'll like probably break their leg.
They'll never make it through the door.
Yeah, like, because I have my kids, they just come in and they literally throw their backpack and their shoes. And I was like, who do you think we have a maid? Where do you come from? Who do you think somebody just comes in the night and miraculously cleans this up? It drives me crazy. But yeah, we have to stop comparing as a culture. We need to stop comparing what we have going on to somebody else because it's not the same. We don't have the same path as everybody else.
Yeah.
It's just a matter of having the conversations and really just being more educated, right? We just need to know our options are, and we need to not be afraid to ask the questions because we're afraid that it's going to cost us money. Like there needs to be more transparency, and that was one reason that Global Financial Impact was created as well, is because we wanted more transparency between the financial industry and middle America, because they're not being told all of the information that they need to be told. Because I will tell you that when I hear commercials for, and I was talking to a Payton a little earlier about this, was when you say that you're going to tax the wealthy, I guarantee you they're not paying any more in taxes because they have people like us that have already found a way to legally hide their money. And we're just using tax codes. So just like your 401k, we're using a code called 7702. We're using TAMRA, DEFRA, TEFRA. Like we're using all of these tax codes that were put in place, and they're not going to change those tax codes because they're taking advantage of them. So it's just a matter of knowing where you're supposed to look and how you can take advantage of that same framework.
I love it.
No, I love that. And I think, I just think starting the conversation here and having people have the ability to hear that more than what their parents did or what they may think that they're doing is necessary. And we'll definitely share all of your contact information so that people can reach out when they have questions, because Tyler and I are not the ones who need to be asking. We don't know.
Not me. Not me.
That's right. That's not us. We again, stay in your lane. We know ours. So we will let Kara field those questions for you.
100%.
Yeah, absolutely. Yeah. I mean, honestly, I'm direct message or text away. And then there's no question that's not a good question. You know what I mean? Please ask the questions and get educated. And if I can't help you, I'll certainly put you in contact with someone that can. But it's having the knowledge is they say knowledge is power. It truly is. I mean, just knowing, because you work hard for your money. I tell it to people all the time. I'm like, you work so hard for your money. And it's like, have it be working for you, right? And what I do is it's very much math and science. It's not like something tricky. You don't have to have any special skill. It's just a matter of having the knowledge of that you have access to it. So yeah, happy to do financial reviews for anybody. Look at what you have. And typically I'm not necessarily replacing what people have. And a lot of times I'm not even adding an expense to you, because sometimes it's like, hey, why are you contributing to a 401k if you could just move the money elsewhere and it could grow tax free, right? Because when I was 18, I was, I'm going to put 20% in my 401k. But I didn't really think about like, I've got to wait 41 and a half years until I can even touch it. Like, I didn't know. Nobody presented it to me that way. And I didn't ask any questions because I was like, that's my only option. I just didn't know that I had an option to do something else. And possibly be able to do something where my money would do better for me in the long run, and I would have more flexibility in like when I can access it and not have to work a 9 to 5. So, happy to be in this industry and being able to make my own hours and not working for someone else. So get to be your own boss. And now, again, it's not easy. It's not simple. This is not a get rich quick. Being your own business is very, very hard. If it was easy, everyone would do it. I always say that. I'm like, if this was easy, like everyone would be doing. I mean, people make it look very easy, but again, see how many years they've spent.
Exactly.
Making it look
on
easy.
their craft. Yeah.
Give you a personal plug. I'll show you how my two fields collide. I was doing a property a few years ago, and next thing you know, we got to talk. I was talking to the owner, and he goes, "Well, I've been denied life insurance." I think he said a dozen times because he was former military, and he got put on suicide watch because he had been sent off 3 times to Iraq. He said, so after the second deployment, everybody gets put on suicide watch. And so you're immediately denied life insurance whenever you're on suicide watch. And I said, I don't think that's right. Let me put you in contact with somebody. And I literally pulled up, shared contact information, and got that person, I don't want to say his name, got him connected with Kara. And I think it was like 48 hours later, he had life insurance. And so it's like, it just lined up perfectly. And so it was just case by case, but that's just how these two worlds can collide. You just never know. You just never know who you can run into and be like, oh yeah, I know somebody that can help you. But that's all my myths. I don't have any more that we need to bust because I think we busted them all.
I think so.
Yeah.
Well, we're gonna go ahead and put a cork in it. Just look for on the social post that we'll put out, as well as it'll be down in the comments, a little description how you can get in touch with Kara and all that, and just kind of just see where your finances are, as well as hopefully get you set up with a trust and a will. That way, that in the unfortunate event that something does happen, like your family doesn't have to take care of your mistakes. So
right.
It's been a pleasure. It's been a pleasure having you on today because I got some check marks that I can now talk with Kylie about. So
yeah, yep. Thanks so much, Kara.
Oh, you're welcome. Thank you. I appreciate it.
Awesome. Thank you so much. That's the wrap on episode 35. We're always around on Tuesdays for new episodes, so stay tuned for whatever else we got coming down the pipeline.